And this is Bloomberg Technology. Coming up, BlackBerry back under pressure as shares dive less than a year after it went all in on software. We'll break down the first quarter miss that ended the Canadian company's 2017 winning streak. Plus, from Tesla's sudden lane change in China to the mutiny at Uber, we've got all the highlights from the biggest stories this week in tech. You'll see them this hour. And as more portfolios in Africa start to diversify from oil, we take a closer look at the emerging tech scene. Our deep dive into the VC climate on the continent and how it stacks up against the competition. First, to our lead. BlackBerry shares plummeting more than 11% in Friday trading, the company hitting a speed bump in its quarterly earnings report. The one-time smartphone maker that's now out of the hardware business missed analyst estimates for total revenue. Before today, BlackBerry shares had risen 60% this year. Keep in mind, most of its revenue now comes from software. Joining us here in the studio, our Bloomberg editor-at-large, Corey Johnson, and from Toronto, Bloomberg tech reporter Garrett DeVink. Garrett, I'll start with you. So why is the stock down so sharply after what's been an okay year?
Well, they've had a great year, actually, like you said, 60%. And so, even taking in today, it's still a pretty good year for BlackBerry, up more than 50% since the beginning of the year. But, the reason they've had such a great year is because people started finally treating them like the software company that they've become. I mean, they have gotten rid of phones completely. They no longer have to handle that manufacturing risk. And, of course, the brand is disappearing. And so people aren't worried about that anymore. So investors said, hey, there's a software company. Let's value it like a software company. But when you're a software company, you have to hit your growth targets. You have to meet expectations for quickly growing software revenue, which is what they weren't able to do this quarter, and that's why the stock's down.
Now, Garrett, I did speak to John Chen, the CEO, several months ago, where we talked a little bit more about how the transition was going. Take a listen to what he had to say.
So we are repivoting more towards the licensing our software, our IP, our know-how to other people who like build phones. And then we're going to get, it will depend on relying on a royalty streams. I think it's the right strategy going forward.
So you're still making one last in-house phone?
Yeah, we have one keyboard phone, I promise people.
What's up with that phone, Garrett?
That's a good question. I mean, we didn't get any numbers specifically from them, and it is designed in-house, but again, it's not manufactured by them. That's all done by TCL Corp, major Chinese manufacturer of phones. So, really, even if that phone, does really, really well, and everyone says, finally, the keyboard Android phone that we've all been waiting for, it's not going to make a big difference for BlackBerry's bottom line.
Corey, we always knew this would be a difficult transition for BlackBerry. Yeah. John Chen said as much as well. What's your take on whether they can pull it off?
Well, I mean, they're pulling it off, sort of. I mean, you have to ignore the profits this quarter. There was a one-time gain of nearly $1 billion thanks to a settlement with Qualcomm. They sued Qualcomm and actually won $980 million some dollars, as I recall. But that all went into earnings this quarter. There's no affiliated cost to that except for legal fees, which were not substantial. So the result is that this quarter looked a lot better than it really was. But if you look at the software growth on a year-over-year basis, sort of percentage gains, you can see that the growth in itself has been kind of really bumpy. But when you look sequentially, and it's not the perfect way to do it because there's a bigger sales in the fourth quarter, but on a sequential basis, you can see that decline down to 1% quarter-over-quarter gain in software sales, and that's concerning for this business. That do they want to be in software with higher margins? Sure, but they need that business to grow. They've spent billions of dollars in acquisitions. They plan to do even more, but they need to have growth, not just a survivable business there. And the concern among investors is that is this all we're going to get from this business as the hardware revenue goes away?
Garrett, Chen has a lot of cash on hand. What kind of acquisitions could he make?
Well, he was definitely, heavily hinting to them. I mean, he literally told us when we went up to Waterloo to talk to him that he will be doing acquisitions and he will be doing it to grow revenue. So kind of going back to the strategy that Corey was referring to, where they were essentially buying revenue, they're going to try that again, probably over the next 12 months. And he did, though, say that it's not on the product side, it's more on expanding their market opportunities. So one potential for that could be going out and buying other companies that compete with QNX, so other smaller companies that make automotive operating systems for cars, that kind of thing, to sort of expand their market share in an industry that they're already quite deep into.
All of this as we're about to mark the 10th anniversary of the iPhone, showing no signs of slowing down.
Yeah, it's really amazing to see the change in the guard here, and I think it's worth remembering for all technology investors, right, to think how much things can change, how dominant, Nokia was 15 years ago in the cell phone business, and now it's completely gone. And dominant BlackBerry was when the iPhone came out. No one imagined this phone without a keyboard could be a competitor to this
Crackberry.
The Crackberry. I said that in my first week at Bloomberg, and everyone thought I was going to get in trouble for saying Crackberry on the air with us here. But that's kind of where we were at with BlackBerry back in the day, and it's just this collapse. There's this great chart I've got on my Bloomberg terminal if I can show you that Dan Curtis, one of our colleagues, put it together. It's #BTV, and then right 3872, and you can see the number of BlackBerries being sold in the blue and the revenues in the white line just coming down and down and down, and the business has frankly collapsed. Similarly, and I was a little surprised, I was looking through my model today of BlackBerry, their service revenues have also collapsed with that. There were a lot of service revenues directly attached to every BlackBerry device sold. Those are gone as well. So the business that was there is gone, and it didn't really get replaced with anything. The software business is a new business, but infinitely smaller than the BlackBerry of yore.
All right, Corey, hang on a sec. Our Bloomberg Tech reporter, Garrett DeVink in Toronto. Garrett, thanks so much for joining us today. Corey, I do want to ask you one more thing, and that pertains to Google, which is giving up one of its most debated ad formats, those pop-ups inside Gmail messages that scan messages for content. The decision comes from the top of its cloud unit, though, not its advertising team, as Google angles for more corporate customers. What is your reaction to this?
Well, it's only the corporate email that's going to lose the ads. They're going to continue to gather data from people that refuse to pay them, like you and me. but I think I think what's really interesting here is this Google Cloud effort. Everyone in the cloud business, Amazon Web Services, Microsoft Azure, IBM, Oracle, Rackspace, and others, are worried about what Google's going to do in this space and how big Google could become because of where they sit in the tech infrastructure. But what's very interesting is what kind of clients they might get. There's a theory out there that says that eventually you're going to have big corporate Fortune 500 companies go to Microsoft Azure, and maybe if IBM can get their act together, IBM as well, or maybe even Oracle. That's one kind of fight, and Microsoft certainly got the lead there as the second largest cloud provider. That new companies, the Ubers and Airbnbs of the world, will build their services with Amazon Web Services, but the companies that want compute, they just want to send out all their processing to the cloud, that they will be the users of Google. And what this suggests is that Google's going after the Microsoft kind of customer, not just the compute customer.
All right. Corey Johnson, our editor-at-large, as always, thanks for joining us.
Thank you.
Coming up, we will take you to the NOAA conference in Berlin, how the top names in European tech feel Brexit will impact the sector. This is Bloomberg. One of Europe's biggest tech gatherings, the annual NOAA conference, has just wrapped up in Berlin. Bloomberg's Caroline Hyde was there and found, not surprisingly, one key topic dominating the conversation.
Brexit, Emily, you can't avoid it. And it really did dominate discussions at the NOAA conference. And I got to speak to some of the key speakers there in Berlin about the UK's decision to leave the EU. Take a listen.
We think this is a temporary blip and not a reversal in course. And you're already starting to see this a bit. I mean, who knows what to make of the most recent UK election. In France, you had a very pro-openness, a very liberal government elected very comprehensively into power. And so we view what's happening in the UK and the US as not representative of the long-term orientation towards globalization and more openness.
Do you think Brexit will affect the UK-based startups or not?
Oh yes, big time. So I think there's everything that has to do with regulation, the passporting is gone. Then the European Investment Fund, which basically invests in all the venture funds in Europe, just said that investment in the UK are not in the EU quota anymore, so the percentage these funds can invest in the UK dramatically will shift.
The UK, interesting questions. I would say so far no real difference. But in 1 year, 2 years, 3 years from now, it's tough to say.
Brexit and Trump were very helpful for European developments, because a lot of Europeans said, okay, let's take a break. Let's go into a different direction. And suddenly the French do not vote for Marine Le Pen, they vote for Macron. There is a new and alternative form of political leadership, and it can be new and fresh without being, let's say, populist or authoritarian.
An optimistic note being struck there by the German publishing giant Axel Springer. Now, it seems you can't go to a technology conference nowadays without a car company being present. In rolls Porsche. I spoke to the CEO of Porsche Digital, really about the presence of the company, not only in Germany, but also in Silicon Valley, and got to discussing perhaps the future of the digital push for the luxury car maker. It seems as though, well, tech giants are actually where he sees the competition, not rival automakers. But it seems as though Porsche isn't too keen to embrace the whole sharing economy just yet.
Typically, you really aspire to the ownership of a Porsche. That's something that we want to kind of preserve. It's something aspirational. There isn't another product that, young kids hang a poster up on the wall because they're aspiring towards that product at some point. It's fascinating if you think about it. There isn't really much. Maybe a star celebrity that you would do this with, but not with the product. And that's something that we want to preserve, but we definitely want to go beyond mobility. So, there's the car itself, then there's ownership and mobility around it, and then there are other things that are much more lifestyle-oriented. And it's really that lifestyle that we want to focus on, because digitization means you're actually expanding and blurring the lines of a core industry, the industry that you're in, and the product that you currently have. You're going to different areas, new segments. We're doing this by combining physical assets, our vehicles, with virtual dimensions and value propositions that might represent your lifestyle. So that means we want to help you to organize your weekend. We want to do this before you even think about having a need, and doing this in a premium, aspirational way, because we know what you want as a customer.
How? Paint that organisation for me. I get in the car and it tells me where I should go, how I should park, what I should buy.
Even before you get into the vehicle, we'll tell you, this is a nice weekend, the weather looks really promising. We pick for you a route that you should actually take in order to get to a really cool location. We arrange for you a hotel, maybe even a tour along with that, which doesn't have to only be limited to the car. And we will actually look at other ways of how we can enhance your life, maybe even meeting people that are like-minded, and exchange information on a professional level as well as a leisure level.
Who do you work with when it comes to the technology giants within the car, and who owns the data?
So we work with all the big guys. Currently, we talk to a lot of them, as well as new companies. We're looking for innovators, not just on the technology side, but also on the content side. We want to be in the role of orchestrating all of these aspects at the end of the day. Really make him Porsche-like. We want to Porsche-fy your experience going forward. We have some really cool and wild ideas. They're based on theories that we have on how technology is going to change. I'm a firm believer in the fact that information, the way we consume it today, is not going to be the way we consume information in the future. Information has to seek us and create an experience around it, rather than how we do it today, where we go and use the internet, use mobile devices to get applications and pieces of information. We want to change that completely. And in terms of the data, at the end of the day, it's the customer who owns the data. We only get a permission on behalf of the customer to unify some of this, orchestrate it, and package it in a very meaningful way. That's very important for us. And we have a trust that consumers give us.
Plenty more great interviews from NOAA conference that you can check out online, Bloomberg.com. Go and have a look at perhaps the interview we did with the travel aggregator Trivago, and also the analytics giant app Emily.
Bloomberg's Caroline Hyde there from Berlin. Coming up, we take a look at the working relationships between VCs and entrepreneurs as another Silicon Valley figure takes an indefinite leave of absence. This is Bloomberg. On the heels of Uber CEO Travis Kalanick taking a leave of absence, then resigning, another Silicon Valley figure is said to be taking a leave of absence after allegations of misconduct. This time, venture capitalist Justin Kalbecht has announced his indefinite leave from Binary Capital, a venture capital firm he co-founded, in a statement provided to the online news publication Axios. The announcement follows a report by another publication, The Information, of allegations of sexual harassment, which reports 6 women had uncomfortable encounters with Kalbecht. 3 of those women spoke to The Information on the record. Joining us now here in the studio, Gina Bianchini, founder and CEO of Mighty Networks. Gina, great to have you here.
Thank you for having me.
I should start by saying that Justin Kalbecht has released several statements, the latest of which was, "To say I'm sorry about my behavior is a categorical understatement. Still, I need to say it. I am so, so sorry." I have personally spoken to all of the women named in the information report. They confirmed their account to me. Susan Ho, one of the entrepreneurs, told me it is just behavior that is so appalling. And for us, it was as if we don't say something, and this happens to other women, it's kind of something that we could have prevented. We're not going to speculate on the facts here, but what's your reaction to this story?
I would love to believe that we are sitting at a moment where there is a sea change happening. And the things that, up until this point were the positives about venture capital or, the way tech companies have been run and startups have been run, there's a pause and a moment to say, actually, we need to get more people involved for this industry and these companies and new companies and innovation to happen. And it can't happen if there is sexual misconduct and sexual harassment at the core of a dynamic with women, women of color especially. And I believe that this is the first step, and it is certainly not the last.
You're a woman who has raised money in this industry. Have you ever had an experience that has made you uncomfortable? What has been your experience?
Yeah, absolutely. And I know very few women who don't have an experience that either made them uncomfortable or that was a friend of theirs. But I think there's something really important to flag in this conversation, which is every woman, myself included, wants to talk about their company. I would love to sit here and talk to you about Mighty Networks and all of the amazing work that we're doing as a SaaS platform for people creating their own social networks. The fact of the matter is that as a female entrepreneur, there's a tax that I am paying because of this bad behavior that I didn't do it. And I think that the opportunity here is to say enough, and that's what has been wonderful to see today and yesterday, the men in this industry saying that this is unacceptable. It's unacceptable as the CEO of a $70 billion company, and it is unacceptable as a general partner in a $300 million fund.
Now, the tweets to that effect started rolling out a few hours after the article dropped. Reid Hoffman, co-founder of LinkedIn at Greylock, actually posted extensively about this today. He said he was outraged, and he actually talked to you about what can be done, and you suggested some sort of HR function or code of conduct governing the relationship between venture capitalists and entrepreneurs, because currently there is no framework for that.
You and I have talked about this. One of the things that has always sort of shocked people when as an entrepreneur, when I've said, yeah, because there's no HR department, So if I'm actually propositioned in a fundraising dynamic, or after I've taken money from someone, who do I go to? Am I going to go to the other partners? Maybe, but now I'm in a he said, she said at a moment and a time when my competition is actually, recruiting and raising more money and building and innovating. So now I got to go deal with that? No, I'm not going to go deal with that. And so I actually believe that this is only step one. This is the first step. And as we start to say that there is a code of conduct and a set of behavior that would happen in a big company, we're only going to get better from here.
How might something like that get reinforced or enforced at all?
So the good news is that there are experts at this. I'm not one of them. I'm building software. But what I do think is really important is that up until this moment, it hasn't even been clear what is acceptable and unacceptable. And the first step is saying this is unacceptable. The second step are people like Reid or Mike Maples or Josh Koppelman or Finn Barnes or Rob Hayes. All of these people stepping up and saying, this is not acceptable to us, and if you let us know that something is going on, we will take action.
This very same week, Travis Kalanick, after taking a leave of absence, has resigned. This after a long investigation by the former U.S. Attorney General into allegations of sexual harassment. A woman named Susan Fowler came forward several months ago. I have no words. But do you think that these kinds of consequences will actually lead to a better Silicon Valley?
I think that addressing sexual harassment and unconscious bias and conscious bias, for that matter, will lead to a better Silicon Valley. I believe that
the counterpoint is that for many years, some people say Travis Kalanick behaved, unacceptably or created a culture that wasn't acceptable.
Well, that was what I was going to
investors let it go.
Follow the money. Mm-hmm. And actually, I think that the real story of Uber today is the fact that Travis didn't just resign. Mm-hmm. He's on the board, and what he extracted in return for resigning as CEO is to remove Bill Gurley from the board, mm-hmm. if reports are correct. Mm-hmm. And he is still actively involved in finding that next CEO, in continuing. He's the largest shareholder, I believe, and has the most control. So I don't think the Uber story is over.
All right. Gina Bianchini, founder and CEO of Mighty Networks. We'll have you back to talk about your company, I promise. Thank you so much for joining us. Coming up, just in the last hour, SpaceX successfully fired up a Falcon 9 rocket for the 8th time this year. We dig into the state of Elon Musk's space ambitions next. This is Bloomberg.
I'm Elisa Parenti in Washington, and you're watching Bloomberg Technology. Let's start with a check of your first word news. 800 households are to be evacuated from a council estate in North London in the wake of the Grenfell Tower fire. Officials say it is to allow urgent fire safety works to take place. High-rise buildings on the Camden estates were being emptied this evening after firefighters said they could not guarantee the residents' safety. Meantime, Theresa May says her thoughts are with the public housing residents being evacuated. She tweeted her support to emergency services to continue to safeguard the public. Earlier, the British Prime Minister spoke in Brussels, calling her proposal on the post-Brexit rights of EU citizens in the UK fair and serious.
We had a very positive discussion about the offer that the UK had made to EU citizens, and indeed other leaders have also reacted positively to me on the offer that we have made.
But European Commission President Donald Tusk says May's proposal is about reducing citizens' rights. May says that almost all 3 million EU citizens in the UK will be able to keep living there after the breakup. UN Secretary General Antonio Guterres will press Congress to reject the Trump administration's proposals to cut deeply the UN, its funding. Guterres will meet with members of Congress, the Appropriations and Foreign Affairs Committees, and possibly senior cabinet members. The administration's proposed budget would cut funding for UN peacekeeping by more than 50%. The U.S. says it has killed a key money man for Islamic State. The U.S.-led military coalition says Fawaz Muhammad al-Rawi was taken out in an airstrike last Friday near the Iraqi border. Al-Rawi is reportedly owned a currency exchange that he used along with a global network of financial contacts to move millions of dollars into and out of Islamic State-controlled territory and across borders. Turkey has rejected a key demand by several Arab states involved in a major dispute with Qatar, saying it has no plans to shut its military base there. The demand that Turkey pull out its forces was one of a list of ultimatums from Saudi Arabia and others, which have cut ties with Doha over alleged ties to terrorism. Qatar has confirmed receiving the 13-point list of demands from Kuwait, which is mediating the dispute. It has 10 days to comply. Paris has recruited its most famous landmarks to promote and boost its bid for the 2024 Olympics. The City of Lights is putting on a show with 100-meter races on a track floating on the Seine, high divers plunging into the famous river, and cycling around the Arc de Triomphe. Paris is competing against LA to host the Games. Global news 24 hours a day, powered by more than 2,700 journalists. I'm Elisa Parenti, and this is Bloomberg.
This is Bloomberg Technology. I'm Emily Chang. There were a lot of tech-related headlines grabbing our attention this week after months of scandal, first and foremost, and controversy. Travis Kalanick, he is out as CEO of Uber. Plus, several tech leaders, including Tim Cook and Satya Nadella, traveled to the White House to meet with President Trump. Earlier, we were joined by Bloomberg Tech executive editor Tom Giles and our Bloomberg Tech reporter Eric Newcomer to wrap the headlines in tech. Take a listen.
Well, it's just the beginning of what's going to be, I think, a long process, but the initial indications from the public statements we heard was that there was a pretty collegial atmosphere. Donald Trump came out and talked about how he's working hard with Congress to make some concessions on H-1B visas or immigration more generally. He indicated to the tech leaders that he hears their concerns about whether they're going to be able to get the workers that they need. So that's the positive note. Tim Cook made some comments, which I think we're going to hear in just a second. So it's a beginning of a big process. There's a lot of work to be done. Jared Kushner talked about the 8-inch floppy disks at the DoD, the 6 months to approve changes at the on government websites. A lot of work to be done, and I think they've started to do it.
Let's take a look at what Tim Cook had to say to President Trump directly. Listen in.
The U.S. should have the most modern government in the world, and today it doesn't. And it's great to see the effort that Jared is putting in working on things that will pay back in 5 and 10 and 20 years.
Tim Cook didn't join presidential council by choice. He told me he doesn't think they're terribly productive, but that he thinks it's important to work with the administration, whatever your politics are. Right. What do you make of what he had to say there?
Yeah, I mean, this is Tim Cook showing that there are some areas where we're going to we will make concessions. We disagree on immigration. We disagree on the environment, right? But he cares about veterans issues, and that's one of the things that Jared Kushner wants to modernize. So Tim Cook and the rest of tech will work with Trump where it matters and where it benefits them.
Got to talk about Uber. Big week.
Every week.
Travis Kalanick resigned.
Yeah,
this week.
You're right. That is the biggest. It's really crazy. I mean, the CEO of Uber has resigned, and Bill Gurley, who is the steward on the board, sort of so instrumental in a lot of their recruiting, and then in the process to get rid of Travis, has also stepped off. So it's a mind-blowing week in Uber world.
You had a great piece on the sort of Game of Thrones political maneuverings that it took to make this happen, and in fact, Gurley was the one who got other investors on board to deliver him this letter asking for his resignation.
Right.
Tell us a little bit more about what happened.
So, what Gurley couldn't do on the board, get the board to sort of oust Travis, he got a coalition of investors, including Fidelity, lowercase, 5 investors altogether. And then he had his partners, Mac Holler and Peter Fenton, hand deliver this letter to Travis saying that, your investors have turned against you, you need to resign. There are these legal cases in Waymo and this Indian rape case that are issues, and you've put the company at risk. You need to step aside.
So we know that they had another board meeting yesterday.
Yep.
What is the latest? Where are they now? Doesn't
seem like in the scheme of Uber dramatic board meetings, not the top of the list, but they're, David Trujillo from TPG, Matt Kohler from Benchmark are now on the board, along with Wan Ling Martello, and then they're beginning this search process to find the CEO who will replace Travis. So I think it was sort of moving that forward.
Now, it seems like there isn't anyone specific waiting in the wings to take this job, whether it's a CEO or the COO job, that they're kind of starting from scratch.
Well, they've been talking to candidates, but yeah, there isn't a clear favorite. There's certainly no strong internal candidate, so it's a matter of finding some well-liked, high-profile executive who's run a big organization already who can step in and help recover the brand and sort of the organizational prowess at Uber.
Right. The search for the next Uber CEO will dominate the headlines, I'm sure, for the next few weeks. One last story we want to touch on is Tesla making an agreement with the Chinese government to produce vehicles in Shanghai. What can you tell us, Tom?
Big change from the way Tesla makes its vehicles now. They're all here in California. It would be a big break with tradition, but this is a big market for Tesla, and they face this 25% tariff when they bring cars that are manufactured here. That really puts them at a disadvantage. So they're much more expensive in China than they are here. This is the kind of thing that brings those cars and gets them closer to the public and where there's a lot of demand for Teslas.
Bloomberg Tech's Tom Giles and Eric Newcomer there. Now, to out of this world, SpaceX today successfully firing up a Falcon 9 rocket for the 8th time this year. Its next launch is scheduled in just 2 days, putting the company on track to achieve the 20 to 24 total missions it targeted for the year. By racking up more successful launches, SpaceX has positioned itself again as a driving force in the new age space race. Joining us now with more, Bloomberg's Dana Hall. Dana, what is the significance of the launch today and later this weekend?
Yeah, so today was the 8th launch of the year, and last year they just did 8 launches total. So you're really seeing a kind of rapid ramp up of their, what people in the space world call their launch cadence. And this is significant because SpaceX has a lot of missions on its manifest, and they really want to get into a pattern of launching rockets like once every 2 weeks. And Elon has said on Twitter, his favorite form of communication, that launching rockets is getting kind of boring. And to be honest, it actually kind of is. I mean, remember just last year they landed on the drone ship for the first time, and that was this huge milestone. Today they landed this rocket on the drone ship for the 7th time.
Right.
So all of the efforts that they've put into rocket reusability are really becoming par for the course.
It hasn't always been so boring, though. You know, they have had failed launches. Are those failures completely behind them?
I think there's always a risk of failure in the launch business, and the launch community understands that. The last failure that SpaceX had was in September, but they were able to kind of get through the investigation and return to flight pretty quickly. So it kind of feels like they have their mojo back, and they're coming back gangbusters. They've got more launches scheduled this year than any competitor.
So what does this mean for SpaceX customers?
Well, it really means cost, and we don't have a lot of visibility into what SpaceX is charging, but they are now reflying boosters that have flown before and offering those launches probably at a discount to their customers. So now the question is, will satellite customers feel confident flying on a reused rocket? The one that flew today was reused, and so you're getting to the point where the launch missions will really come down in cost.
And I know they're all doing slightly different things, but where does this put SpaceX in the private space race with Virgin Galactic and Jeff Bezos' Blue Origins?
Yeah, I mean, I think what SpaceX has more customers and more launches. Everyone is working on reusability, but SpaceX is now proving that they can do reusability with paying customers.
So what's next for SpaceX?
So there's a launch on Sunday from Vandenberg Air Force Base here in California. That's 10 satellites for Iridium. And then there's another launch in early July. And then later this summer, we're supposed to have the first test flight of Falcon Heavy, which is their big heavy lift rocket.
All right. Dana Hall, we'll be watching this weekend. Dana Hall, who covers SpaceX and Tesla for us. Always great to have you. My pleasure. Now, more problems for Toshiba. Its shares have now been demoted to the second section of the Tokyo Stock Exchange after its shareholders' equity slipped into negative territory for the latest fiscal year earlier Friday. Toshiba asked for an extension to submit its earnings report. Toshiba has been rocked by multi-billion-dollar losses in its nuclear unit. The company is selling off its prized memory chip business to raise cash. Coming up, we take a look at Africa's emerging tech scene, how funding for startups on the continent compare to the other tech hubs around the globe. This is Bloomberg. Ireland is said to be seeking ways to protect itself against any losses stemming from holding about $14.5 billion of Apple's back taxes. This, according to 2 people familiar with the matter. Ireland wants to make sure it isn't left on the hook for any drop in the value of the fund during years of appeals at the EU courts. You'll remember last year, a European Commission slapped Apple with the multi-billion-dollar bill. The Commission said Ireland granted unfair deals that reduced the company's effective corporate tax rate. Meantime, a lot has been said about Africa's emerging tech scene, and with all of its promise, however, actual investment in tech startups there is still lacking. In 2016, only $129 million was invested in all of African tech startups. That's less than the amount some Silicon Valley startups raise in a single round. That's where the Digital Financial Services Lab, also known as DFS, aims to come in. Founded in 2016, the initiative is an early-stage incubator that supports fintech businesses in developing countries. Backed by the Bill and Melinda Gates Foundation, DFS Lab recently announced a $250,000 investment in 4 separate fintech startups that service all of Africa. Joining us now to discuss, DFS Lab's director, Kendall. So talk about this initial investment.
Okay, well, thanks for having me on first.
You're welcome.
The initial investment, we've got 4 new companies that we're adding to our portfolio, and they're based in Kenya, 2 of them, Pula, which is doing micro-insurance using satellite data, and Pezesha, which is one of the first peer-to-business online lending marketplaces in Africa. We've got one in Ghana, which is doing a really interesting play, creating an online identity platform to identify people for financial services. And then finally, there's Teller, which is based in the United States, serving Africa and South Asia. And they're creating natural language processing chatbots to help people use their financial services more naturally.
It's great to have this seed funding for these companies, I'm sure, but it's still a drop in the bucket compared to the kind of numbers we see in Silicon Valley. Why do you think that is?
Well, some of it's history. I mean, if you look at Africa, it's 1 billion people, a largely young population, rising incomes, a lot of interest in new services and new technologies. A lot of new infrastructure has been put in place, a lot of new mobile networks, and the adoption of mobile phones has been going gangbusters over just the past few years. But in the longer history, there's obviously been challenges in the past with governance and with exits and investments and things like that. And so I think investors are still thinking of Africa the way it used to be, whereas we see it as an emerging opportunity with a lot of new consumers hungry for new products.
Talk to us about the startup landscape there, what sort of trends you're seeing, and how developed these trends actually are.
Yeah, well, a lot of the investment that is happening is kind of clustered around a few specific markets, so Nigeria, Kenya, South Africa. And the trends you're seeing are ones where, they're often applying technologies to really bring down the cost. If you want to serve low-income people with financial services where they want to buy in really small packet sizes, very small insurance contracts, tiny micro payment transactions, tiny loans, the costs have to be super, super efficient so that you can serve those people. So a lot of the companies that are successful are finding ways to really drive down costs per user and things like that.
So what is the most promising trend in African tech right now?
Wow, I definitely think the emergence and adoption of smartphones there. The population in Africa, roughly speaking, there's maybe 50 or 60% of the population has a mobile phone. A lot of them are not smartphones, but smartphone usage has doubled in the past 2 years and growing from admittedly a pretty small base, but really charging ahead. And so that lays a really strong basis, connecting people for all kinds of other digital services on top of it.
Among the challenges, in addition to funding, energy and power, things that are very important to operating a business, there are days-long blackouts at a time.
That's right.
How do you handle that?
Well, people get creative. There's generators all over the place. Half the households in Nigeria have their own generator. So people create fail-safes and backup systems. One of our advisors actually is a guy named Nick Hughes, and he's created an off-grid solar power solution that uses mobile technology to finance it. And that's popping up all over Kenya and giving people sort of an off-grid solution. So we actually see a huge opportunity where a lot of people see a risk, right? Where there's a lot of missing infrastructure, either in the financial side or just basic electricity and things like that. A lot of entrepreneurs are actually stepping in to fill that gap and create businesses to sell infrastructure services and creative solutions to some of those problems.
What's been the involvement of the Bill and Melinda Gates Foundation?
Well, the BFS Lab was started actually as a partnership between Caribou Digital, which is kind of the host company that's been incubating us, and Bill and Melinda Gates Foundation. And the Gates Foundation's interest is really in supporting the application and development of new cutting-edge technologies to that problem of how do you bank that last 2 billion people on the planet who don't have financial services. And that's exactly what our companies are doing. They're applying things like natural language processing, satellite imagery, biometrics to creating that next generation of financial services.
All right, Jake Kendall, DFS Labs, thank you so much
for
joining us. We'll keep our eye on you guys from the other side of the globe. Coming up, interest in AI technology has exploded in the last year, and investors are taking notice. Brian Cohen from New York Venture Partners gives his outlook on the frenzy around machine learning. This is Bloomberg. Facebook is looking at leasing additional office space in Dublin. According to people familiar with the matter, the company is considering 75,000 square feet of space near East Point Business Park, where Google and Cisco also have offices. Facebook already agreed to rent space in the district earlier this year. Dublin is home to Google's European headquarters. Well, venture capitalists are pushing a lot of cash into artificial intelligence, more than doubling the investment into virtual reality technologies in 2016, according to PitchBook data. And more than $2 billion have been invested in machine learning technology so far this year. Brian Cohen, founding partner at New York Venture Partners and chairman of New York Angels, spoke with Bloomberg's Scarlett Fu at the Cornell Tech at Bloomberg panel on the growing interest in AI, as well as insights on the next big thing.
I guess everybody wants to get back on the AI track. AI has always been, part of the conversation for a long time, but now it's become really vogue. Data scientists, my God, you can get a job as a data scientist just immediately at $250,000 a year if you're really a great data scientist. So it is a lot of AI. There's no question. Machine learning it's everywhere, and it will continue to be everywhere for a long time. Is it real? That's always that question. Is it really AI? I think AI is when you're really doing a lot of number crunching, a lot of data analysis. And many people write algorithms, and they think that if they write an algorithm and it looks at data, and they examine a little of this and a little of that, they're actually doing AI, but they're not. So AI is huge, and it continues to grow. But it's the next shiny thing. And again, because it's so hard to pick and choose, people just invest in it because they can. There's all these new funds. I don't believe in funds. I think angel investing is a contact sport. I want to hug, I want to touch, I want to get close to the entrepreneur. That's the best part about it. I want to get to know you. But there's this rise of funds where people don't necessarily think they have the time, and I get it, but they lose out on so much by putting money into a fund, and funds generally have to invest.
I think about some of the other trends or areas that have been hot, whether it's wearable devices, virtual reality, augmented reality, IoT, Internet of Things,
media. What happened to IoT?
Exactly.
Right.
That's gone? It's over?
I don't hear about it anymore. It's just like, bye.
So that was then.
Yeah.
AI is now. What's next? What's going to be the next frontier?
So we're always asked that, and we try and use our crystal ball. Is it cars, mobility? Well, we're kind of like already jumped on that bandwagon. We seem to have that sort of kind of solved. Biomechanics. Well, biomechanics. I think that's interesting. Brain communication to devices or extensions of our own bodies. So it's not robots, which of course is a possibility, and that's been a possibility for a long time, but maybe it's man-made becoming robots. What is it on Star Trek? The Borg, that we're all going to start adding pieces to our bodies. I actually think that, and I've asked my team and New York Venture Partners to go out and really take a closer look at that. We want life extension. Again, behaviors. So if you ask yourself about Larry Ellison and other people like Larry, they're getting older, and they're not happy about that, right? Ray Kurzweil, you all know about the singularity, right? He's not happy growing older. We're not. And so we want to live longer, so we want to replace body parts. So I think that is going to become a big opportunity.
Bloomberg's Scarlett Fu in conversation with Brian Cohen, chairman of New York Angels, at this month's Cornell Tech at Bloomberg discussion, a special series of talks with tech and VC leaders in New York City. And that does it for this edition of Bloomberg Technology. This weekend on Bloomberg Television, we will bring you all our best interviews from the week, including a discussion of Washington's relationship with tech leaders after the much-publicized meeting at the White House this week. We spoke with Jennifer Polka, founder and executive director of Code for America, who gave us an eyewitness account of the meeting. Tune in this Saturday for the best of Bloomberg Technology. Have a wonderful weekend.